Hey penny stock traders, this is Ben from OTCalpha.com, and I'm doing my morning news search this morning, checking filings, looking for momentum trades in the market, and I want to show you an easy way to say no to a penny stock trade, even if it has good news and a lot going for it in the forward-looking events department. Now this is ticker symbol GNCP, so let's bring it up here on the level 2. GNCC Capital. Now there's no bid right now, which can be still okay. It's definitely more of a lotto, but the ask is at 0001. And here's the news. I'll just sum it up. GNCC canceled its planned reverse split, so that's great. Anytime a company cancels a reverse split, that's good news. Reverse splits are, for penny stocks especially, bad, I would say, all the time. Now, if you're trading the blue chip or the big board stocks, they're not as big a deal. Anyway, so they canceled the reverse split, and they're also looking for joint ventures, which is another great thing. So these are two great forward-looking events. They're canceling the reverse split, and they're looking for joint ventures in their company, which are all usually taken as positive things in the market, and are two ingredients that can really drive a stock price up. But here's where things went wrong for me. One of the first things I do is go to the OTC Markets page, otcmarkets.com, and I type in the ticker symbol, GNCP. This is where you do more due diligence for the stock. And one of the first things I look at, of course, is the share structure. How many shares are out there? And this actually made me laugh out loud, literally. 30 billion authorized shares in the market. And they have 26, well, that's the authorized, so that's how much they can dilute. This is how much they're currently qualified to dilute in the market or put in the market. So they can put 26 billion shares in the market, and the float is 13 billion. So this is super high float, super high share structure. Basically, this thing's a pig, and it's going to take a lot, basically a miracle, to move it at all. It'd have to trade millions and millions and millions and billions of shares to even move a tick or two. Now, pigs have flown before, but this is a tall tale sign that I should stay away from the stock. I actually stay away from anything over 10 billion for the float or AS. Now that's even high. Like most of the time I won't. It just kind of depends on what the stock looks like, what it's trading at. But anyway, this is an outrageous share structure. I mean, I would say I usually try to stick to something 5 billion and under, and it's really nice if it's 3 billion or under. So this has 13 billion shares in the market currently floating around, and they can dump another 13 billion. So that was an easy no. It's not worth it, even though it had great news. That's a sign that you should run away and not trade a stock. It's going to take a lot of dollar volume to move this because of how many shares they have in the market. So that's definitely an easy no when trading penny stocks. And also it was a 000 stock, which is always a lot riskier. It's a lotto, as we call them. But I trade those a lot. It's actually something I'm good at, but not in this case. Way too bloated. And I hope that was useful. Gives you a little insight into what I look for when I trade. And sometimes if one of these things on my checklist is off, especially by that much, 30 billion shares, it's a no-brainer. At that point, I don't even research anymore. I just say nope, move on to the next stock. There's other pigs in the sea, so to speak. Well, hope that was useful for you guys. Remember to check out otcalpha.com for free courses and a nice members area, and to learn more about trading penny stocks successfully. Talk to you guys later. Have a good one.